Vetri Subramaniam joins us now. Let's discuss valuations and the market positioning and the budget impact. Vetri, good morning. Thank you for joining us. We went up,
Good morning,
we went up by nearly 4% plus. What is your sense? Do you think the impact of the budget and the near-term budget adjustment is behind us? Because what we saw on the screen yesterday was absolutely unbelievable.
Well, the one-day reaction of the market is more a function of short-term positioning rather than, long-term investment views. So I wouldn't necessarily treat that as the be-all and end-all. But I think, without doubt, this was a budget which gave a lot of comfort. At least we went into this budget looking for some kind of a pro-growth stance from the government for very long, and rightly so. One could argue the focus has been on the fiscal deficit, but this was not a year in which that should have been the focus. And so, in a sense, happy to see that the government has taken a sort of counter-cyclical approach to sort of spending and trying to support the economy during a difficult time. And the second thing is that literally no change in taxes is a delight. For years, we've been talking about the fact that we don't have a stable tax regime in India. And therefore, literally, when the budget doesn't change anything dramatically on taxes, it actually turns out to be something that can delight all of us. And I think the language of the government, both in terms of talking about the fact that things like wealth tax or a one-off tax on billionaires, all that was not even in the policy consideration set, and that they are looking for the private sector to engage and help this recovery through, in a way, gives a lot of comfort in terms of what the economy can do. You asked about valuations, Nikunj. Look, valuations were pretty pricey in, January. With this pullback, it's back into rich territory again. So from an asset allocation point of view, it is a little difficult when you look at equity. I'd say it's certainly blinking amber, if not red, in terms of valuations. But I'll also add an additional point here, Nikunj, which is that my own experience going back in this market over 2+ decades is that when the market starts to smell an economic recovery and there is no certainty, it's typically the case that the market tends to get expensive very early in the cycle. It literally behaves like a lead indicator. We saw this in 2003, 2004. We, of course, saw this all the way back in the mid-90s as well. And even if you look at the recent upturn in the economy, 2013-14, remember that the market actually traded into expensive territory quite early, and it was subsequently that the earnings started to sort of come through at some level. So I think that's where we are. It's not unusual for the market to get rich early in the cycle if it starts to smell a recovery. Is that a slam dunk 100% probability? Of course not. But yes, valuations being where they are, this is not a time to really shift your asset allocation mix. Just stay disciplined.
Vetri, the expensive part of the market is consumers, retail banks, pharma, IT. But if growth is coming back because of government spending and infra revival, do you think one should be focusing on that end of the market rather than talking about the expensive end of the market? Because IT, pharma, these sectors are unlikely to get that budget push.
No, Nikunj, I think that's a very nuanced question. Thanks for putting that to me. I would tend to agree with you. And, there is one thing when you look at the headline valuation, and then when you start to drill down and look at it bottom up, you actually do find that there are significant pockets of opportunity. I'd say even before the budget, there was a large swathe of domestic cyclicals which were looking interesting. Mind you, even in those companies, if you just went by the starting P ratios, you might argue that they're actually pretty rich. So I think you'd need to take a slightly more holistic view of some of those valuations. But when we look at the domestic cyclical area, Nikunj, I would tend to agree with you. We are seeing a fair number of opportunities in the domestic cyclical space. The other thing, if you then again look at the market based on market cap segments, we still find that in the mid and small cap space, just on a relative basis, we think the opportunity in terms of valuations, combined with what is now clearly a very supportive backdrop, both monetary and fiscal, certainly there are opportunities for bottom-up stock picking. So yes, there is one message from top-down valuations, which is relevant from an asset allocation point of view. But as fund managers, when we're trying to build the portfolio, we do find that there are a lot more opportunities than what we see at first glance.
Of that opportunity list, because now there seems like there's a clear divestment roadmap, which the finance minister highlighted yesterday, along with PSU banks as well.
So I think on the issue of disinvestment, and I think full credit to the government and the finance minister, I'm glad to see increasingly they are starting to call it what it should be, which is really strategic sales and privatization. I think that's very, very welcome. The only point I would make, and you know this as well as I do, unfortunately, execution is where we have suffered in the past in terms of these divestments, privatizations, as one should increasingly call them. So that remains a little bit of risk. But I also want to put another context over here. I think increasingly government of India's attitude in terms of saying they want to sell Air India, or for that matter, they want to sell PSU banks. I'm not looking at it merely from the point of view of how much will government of India get out of this. They may or may not get anything very significant by offering these companies to an investor, because remember, there are lots of challenges in some of these companies. But what they would do if they were to sell these businesses is ensure that in the future, they would not suffer on account of losses accruing to the exchequer because of problems in these companies. Look at the multiple times that government of India has had to step in to bail out the banks or to bail out, Air India. And I think that is what is the most remarkable outcome of this change in thought process. The potential future recapitalization liabilities that have accrued to government of India start to go away because it exits these companies.
Vetri, I know the markets are not currently, but are you at all worried about the inflationary impact that the budget actually brings out? I mean, yesterday you had the bond yield spike up, 15 basis points to a 4-month high. Eventually, the central bank will have to sit up and take notice. Are you worried about what the central bank monetary stance is going to be from here onwards?
It would be foolish of me, I have to suggest that that is not a risk. That is obviously a risk. But, there is a question that the government had to take a calculated risk at this point of time. And I think, therefore, this is a calculated risk, which at least in my thought process makes sense, which is to go for growth, because the only way to get macroeconomic stability, including eventually fiscal prudence, is growth. You're not going to get it by austerity. Now, from an equity point of view, what is relevant is not a slight uptick in inflation, but the totality of it. I would say effectively there are three variables. One, does inflation go up? Do interest rates go up? And finally, do growth prospects go up? If there is an increase in inflation, it's not necessarily negative for many businesses. If there is an increase in cost of capital, yes, of course, it's negative. But when growth prospects go up, it very often more than compensates for that rise in cost of capital. So it is a calculated risk, without doubt, but I think the equation has a way in which it can be resolved favorably. If you get those growth outcomes, they will more than compensate you for any uptick in inflation and the cost in the cost of debt, so to speak.
All right, Vetri, thank you so much for joining us this morning. Great speaking with you, as always, on some of the implications of the budget 2021.